this is important. Tomorrow, Thomas Curry.
Hey, good morning. How you doing, guys? Luis here, Cryptolu. We about to start it with, there we go. Yep, 9:30. We got it. So, I don't understand why it's still in the commercial here. Opening bell. Opening bell. Okay. So this is the strategy that I have open. Let's refresh the page because we already trading. We already got everything. And
All right, let's get to it. A mad dash to start this week. Got a little bit of time because we've got that opening bell coming.
I have not been all that optimistic about Google's prospects versus Microsoft versus Amazon, but I think this is important. Tomorrow, Thomas Kurian, who is really a hitter, will give his keynote at the Cloud Next conference in Vegas. This is the Google Cloud Next conference, and it's going to show off that Google is not being left behind, not be troubled by search. This is the moment when the cloud is growing in both financial and sentiment importance, and I have to believe that it's going to move the stock higher.
Interesting. The stock has already recovered from all of those existential concerns about their monopoly in search that lasted about 3 weeks.
I know that, right. And then people are back recommending.
Let's get the opening bell here in the CNBC Real-Time Exchange. And the big board, it is Dove and Unilever celebrating its 20 years of Real Beauty campaign at the NASDAQ Regional Bank Southern California Bancorp. And come Friday, Jim, we'll be talking about the banks a lot.
Yeah, I mean, this is it. And we've got then we'll kick off the earnings season. I think that they have a lot of positive to say, judging by the fact that analysts keep raising numbers. Some of the banks do quite well in a higher for longer. The reason why we own a lot of Wells Fargo for the trust, beyond the fact that we think that Charlie Sharp is an unbelievable banker, is that they do better in a longer, higher situation. So keep in mind that banks are better than you think at this stage of the cycle.
Speaking of Wells, Chris Harvey over at Wells today ups his year-end target, street high, 55.35. Systemic risk is on the rise, he says, Jim.
I actually found great encouragement with Mike Wilson today. Mike did a pretty good piece, I think, about how we can still buy large cap stocks, even if rates are here. David, I think that he's come around to the bright side of things to some degree.
All right. Well, that's good from Mike Wilson. He was alone in the wilderness there for quite some time.
I mean, you always want to see a guy have more flexibility. That's all I wanted was more flexibility from the beginning. I mean, Carl, I think that when you dig in your heels in a market such as this, you're really kind of hostage to money, to fund flows. So you could be very right, but be wrong on the stocks. And that's what I think happened. He's very right.
More top down than bottom up, or do I have it backwards?
Yeah, well, top like Jamie Dimon. If you read him, you would certainly sell a lot of your stocks. And if you read Mike Wilson, I think you'd say, okay, those are really bad worries. But then he drew the conclusion that you should have known Caterpillar. Well, it's a generic. And what would have been great is if you just said, okay, look, this is my view. Anything can happen, but you need to know that my negativity colors my thinking. And that would have just been versus, say, Ed Yardeni, who was very, he was kind of like, all right, look, the fundamentals don't look that good, but that doesn't mean the market won't go higher. That's why we like him so much.
Speaking of the weekend commentary, Goldman's David Kostin says investors are worried about Costco missing comps, Lulu, Nike, Ulta commentary, although Ulta gets an upgrade today over at Loop.
Yeah, that was interesting. Ulta got an upgrade and PVH got an upgrade. Those were the two.
Matt Boss?
Yes, yeah. The two that really just got crushed. I'm reaching out to Elf because Elf has been, I think, the best about trying to figure out where people are buying. David, I turn to you for completely no reason whatsoever. Ulta is under assault from Sephora, which is LVMH, which is at Kohl's. Now,
Okay.
I don't know whether you've ever been to a Kohl's or an Ulta.
I've been to a Kohl's.
Okay, well, they now play up Sephora more than anything they have. And if you go to Target, they play up Elf. So you've got other places to go as opposed to Ulta. And I think that's what's hurt them. LVMH is so smart. The deal they made with Kohl's was genius, because otherwise, David, you and I would not go to Kohl's.
Because that's what we go for, Sephora.
So we go for Kohl's Cash, and because it's...
I did say I'd been to one. I
have?
haven't been to one in about 10 years, but I have been.
Well, let's sticker it and timestamp that.
But your point is that Elf is the beneficiary here. Is that what I'm picking up
that Ulta
overall?
Ulta is being hurt because Sephora made this deal with Kohl's, and then Tom Kingsbury comes in, who's CEO who built Burlington, another store you're never going to walk into. And it's very good. It's kind of a pipe and rack. I don't know, you probably don't favor those. We'll go. Right now I'm wearing a plastic belt for $13. I happen to get 2 belts for $26 right here, because my belt broke.
At
It's
TJ
every
Maxx.
bit as good as my Falconer. You know, I've got the one from that's better, more that
I'm happy
I
to hear
compare.
that. Yeah.
My belt was more expensive than David's outfit, and instead I've got this one. Look at this thing.
beautiful,
This
Jim.
thing
It
is
is
just.
beautiful.
I mean, I think it's made by DuPont.
Whoa.
Oh no, my battery pack. But look at this thing.
That's
this
beautiful.
is TJX. This is what's
That
going
is-
on in America,
That
Carl.
is some fine
look at this
vinyl.
thing.
That is some fine vinyl.
Rich
You can use
Corinthian
it-
leather.
You can use it for floor panels. You can use it for a belt. This is what's going on in America. And people have to recognize that when you go to Kohl's, you are buying LVMH at an incredibly cheap price. David, I have to tell you, in all my years, I never thought the polyethylene would come to this. Look at the polyethylene can do. Do you think and no cows were killed, and I think that, far as I know, no water was despoiled. About as good as they get in America.
Very nice.
Carl, you want to take it somewhere else?
I was going on the challenge. If that's a challenge for looking for a segue, I would go to BJ Goldman Ups to buy.
I think that's probably right. BJ's probably doesn't have anything nearly as bad as this belt. I mean, the other belt I threw away immediately because it just didn't even. Look, BJ's is being kicked. Their butt's being kicked by Costco, but also by Walmart. We haven't talked about Walmart lately, but that 3-for-1 split helped it. I know that Chipotle feels like you should do a split.
Chipotle is doing a split.
Well, no, but I'm saying
and now's the part where you get to NVIDIA and you talk about the need for a split there.
David, you know, when I asked Jensen Huang, I asked him about a split.
Yes.
You notice how sometimes, like, the people don't even listen to what the person asks, and they just...
Oh, yes.
But I do think that one of the things that Jack Hartung, the great CFO of Chipotle, made the point that it is great for employees. They don't want a fractional share. And it's great for the public. There's no pushback. No pushback from any large institution. None.
No. Guys, I'm going to move on to Tesla quickly because it is a mover this morning, up some 3.6%. This after Friday, when there were a lot of questions about the lower end car that they're supposed to be introducing, and Reuters said they aren't, and then Musk came out later and said, yes, we still are, lower price point, and then also came out and said, well, we're going to have full self-driving.
Yeah, at 5 o'clock, because he couldn't take the stock being down, and the after-hours stock went up 5. I'm telling you, he was looking at the stock.
He's not somebody who I would expect would be looking closely at the stock.
No?
Perhaps I'm wrong in that assumption.
Well,
it's having the intended effect. The stock is rebounding from what had been new recent lows,
yes.
Carl, I think, that had not been seen in quite some time.
Yeah, 162.50 was the year-to-date closing low, which it got close to. I mean, the analysts clearly have no clue what's going on.
None.
Bernstein today thinks this announcement on 8.8 might be more aspirational, like the semi. Deutsche thinks maybe things are going so well on the AI front they can afford to remove focus from a low-cost model.
Well, I mean, look, autonomous is about jurisdictions. I remember I went to take an autonomous vehicle from the airport in Phoenix Airport to the Super Bowl. And you have to get out. They don't allow it everywhere. I mean, it's just, if you think that there's range anxiety, I mean, there's jurisdictional anxiety. It's like, wow, that's about as far as I can go, but I'll drop you off. You can get a real Uber. It's hype. It's just hype.
So Uber and Lyft were lower in part because of this, maybe this notion that Musk was taking pole position on Robo. Is that deserved?
Yes, but because of the hype. I mean, I just think that when he speaks, people just decide that he's right, and therefore Uber gets hurt.
Real quick, guys, this is obviously going to continue to follow the saga of Paramount, which is down another 3%, as shareholders continue to clue into what we've been reporting on for months, basically, which is the favored deal, of course, the one that involves David Ellison and Skydance and his partner at the private equity firm Redbird, in terms of paying a premium, significant premium, to take control of National Amusements, which has the control vote for Paramount, then merging Skydance into the studio and issuing an enormous amount of equity, some $3 billion, as again I've been saying for quite some time, which would be dilutive. You're going to start to see some opposition to the deal from some shareholders, questioning the special committee in terms of what they're thinking as to why, at least they green-lighted this 30-day exclusivity period to try to get this deal done. And guys, you're probably going to need some communication from the other side saying why they view it as such a positive. One thing that could come out of this, if in fact this deal does succeed, is you start to see some rationalization amongst the streamers, starting with Paramount Plus, whether it either is shuttered in some way and or enters a joint venture with, for example, our parent companies offering Peacock, or in other ways. But there is a likelihood that you will begin to see that process that we've talked about for quite some time, and that others have spoken about as well, that there's simply too much money being spent on this content, and it's not going to get a return.
Well, I will just tell you that you are known as the man who killed that deal. You killed Paramount.
Well, I didn't kill the deal.
No, you killed it.
I just actually reported on the terms of the deal. That
your reportage killed it. Okay? That's what everyone told me. Killed it. Now we're gonna segue to something that has nothing to do with what you just talked about.
Okay. Good.
Okay.
Yes.
Back to chips. Okay.
Chips,
there you go.
Chips, baby.
Yeah. Unless it's like chips that are potato chips. That's a little closer to. Taiwan Semi securing more than $6 billion from the Biden administration, a total of more than $11 billion if you want to count the loans. They're ramping up U.S. Chip production with 3 factories in Arizona. People, this is really important because these are the chips that we wanted and we needed. So U.S. Commerce Secretary Gina Raimondo joins us now. Madam Secretary, can you explain how important 2 nanometers is and why this is about security for the United States?
Yeah, good morning. Thanks for having me. This is huge, Jim. You and I have talked about this a lot. This will be the first time in a very long time that we'll be making these leading-edge chips in America. AI, you guys were just talking about artificial intelligence. AI runs on 2 nanometer. Right now, the U.S. makes 0% of these leading-edge chips in America. And TSMC is saying that they're going to start making this in America at scale. So it's good for our economy, but quite frankly, it's good for our national security, because you can't be a great nation if you buy all of your leading-edge chips from one company in another country, in this case, Taiwan.
Do you expect that a company like AMD or NVIDIA would only use this foundry instead of just relying on Taiwan Semi in Taiwan?
It's a little hard to hear, Jim. I think, TSMC is the leader in this manufacturing. And AMD, NVIDIA, Apple are some of their biggest customers. But the important thing here, I think, is AI is a game changer. The demand for chips, not just from TSMC, from Intel, from Samsung, is going to go through the roof. And now more than ever, we need this produced in the United States.
Okay, one last question before I turn it over to my colleagues. There is some criticism of this policy we have of so-called anointing different parts of tech. Could you please tell people that you have, I looked at your team, I've met your team. Your team is the foremost team of people in America to be able to judge financially what's the right thing to do.
Yeah, exactly. I have a team of rock stars who work 7 days a week, former very senior people from the top private equity and investment banks and VC firms in the world, frankly. We have folks who come straight out of industry, economists who come out of industry, engineers, project managers. So I have full confidence in my team. But, you know, you mentioned we are, you know, giving the company just over $6.5 billion. They are investing more than $65 billion. So our money is a small fraction of their investment. Not to mention, Jim, a dozen suppliers are coming from Asia to the United States to service TSMC. So we're building a whole cluster of this supply chain, and chips are unique. Chips are the building blocks of everything digital and AI, and we need to make it in our country.
Secretary Raimondo, it's David Faber. I had the opportunity to pass by the plant not long ago. It's an enormous project, obviously already underway, at least some of the fabs. Sorry for the background noise here. But I wonder, it's been delayed. You know, there had been complaints from TSMC in the past in terms of a lack of potential engineers and the like. How much of that is a concern for you overall in terms of what you're trying to accomplish here, having enough of the actual experts on the ground in the U.S. to be able to get it done?
You know, what TSMC is doing here is path-breaking. You know, it's a scale that they've never invested in the United States before. So obviously, it's you have to assume there'll be some challenges. That being said, these projects are on time. We expect them to be producing at scale 2 and 3 nanometer in the coming years. We know talent is the rate limiting factor for faster growth. By the way, that's not just for TSMC, that's for every tech company. Everyone you guys talk to probably tells you this country has to produce more engineers, you know, more cybersecurity technicians, more material scientists, and we will do that. We at the Commerce Department are standing up a semiconductor technology center, and a huge portion of that is focused on talent development, working with colleges, universities, community colleges, high schools. Talent is the name of the game. The more we produce, the faster we can go.
Secretary Raimondo, just one follow-up from me on a broader question about AI. Obviously, as you said, a lot of this is being done to make sure we continue to be a leader in producing the chips that then power the data centers for things like generative AI. But I am curious as to how much of a threat you view it as. Jamie Dimon talking about it recently, Japan, some headlines out of that country as well in terms of its societal impact being a very negative one. Where do you come down in terms of the guardrails, especially given your ongoing conversation with so much of corporate America?
Listen, the threats and risks are very real. And so the challenge is we have to harness the benefit, which are incredible, especially if you think about drug discovery, drug delivery, you know, AI is applied to healthcare and education. Very exciting. But we have to keep a lid on the risks. I've just stood up at the Commerce Department under the President's leadership an AI Safety Institute focused totally on safety. Look, with AI, we cannot go fast and break things. Cannot. We have to go fast and make sure we have the protections in place, because when you apply AI to, for example, bioterrorism, it's a level of risk we haven't seen before. So it's a balance. It's a balance. We have to be as focused on the danger and the downside as we are on the upside.
Madam Secretary, I am all in on this program, and you know that. I have my first trepidation, which is when I heard that Pat Gelsinger at Intel is $8 billion over. I thought, well, I hope that the Secretary is monitoring their balance sheet, because that is no longer what I think is an acceptable risk for your program.
I hear you. I hear you. That being said, Intel is America's champion semiconductor company, and we are backing that company. We're backing Pat. As you well know, it's a turnaround. He's executing on it, and we've got confidence in him, and that's why we put so much money into the company. That being said, we've partnered with them. It's like any partnership, Jim. Of course, we watch them. We want to hold them accountable, but most of all, we're in it to win it with them.
All right. right, that's good. My concern is duly noted, and I think this program is so brilliant. Don't want anybody to hurt it. Madam Secretary, thank you so much.
Thank you, guys.
By the way, you can hear more from the Secretary at the first ever CNBC Changemakers event in New York City on April 18. This year's Changemakers also include Drew Barrymore, the Commissioner of the WNBA, Kathy Engelbert, just on Squawk this morning, and many others. You can scan this QR code to learn more or visit cnbcevents.com/changemakers. Dow holding 90-point gain here, S&P 5,200.
Our tech's going lower.
Watch bonds this morning as well. We did get to 446 on the 10-year. Data-wise today, we'll get Kashkari with a town hall tonight and Goolsbee at 1 o'clock. But, of course, everything leading up to CPI on Wednesday. Don't go away.
All right, everyone, got the commercial. Let's take a look over here. That's my plays over here. It doesn't look too good. NVIDIA is dragging the market. It's down 1.2% right now. And doesn't look good for NVIDIA. Show you guys this NVIDIA chart. You had the support right here, but so far no blocks. 3-minute support, 1-minute support is already, they're now becoming resistance. Going to close to 2% on NVIDIA. Dragging everybody down. In 5 minutes, we have a lot of supports all the way down to 856. Try to see hitting support, it bounced back, but it looks like the sell pressure is pretty good. I was trying to come back a little bit here, but let's see this one at 867. Let's take a look on the weekly chart. Maybe show me something. Weekly chart. Sorry for all this buy and sell. Nothing in the weekly. They still trauma line. Kind of holding up. 4 hours right on the support. 2 hours we got this big block of sell, but then we have this 856 support. 1 hour 859. 15 minutes, that's what we kind of hold the big support at 15 minutes. Let's draw this support over here.
Changemakers.
Just a few days away from the second installment of our CNBC franchise, Cities of Success, looking at strong examples of urban economic renewal in this country. Our latest episode shines the spotlight on Denver and Boulder, Colorado. Premieres Thursday night at 10 p.m. Eastern Time, only on CNBC. In the meantime, pretty flattish action to start the day, 52.05. We're back in a moment.
And that's why we got the support on NVIDIA at 15 minutes. So we hit this one right here. See if it holds the support. Then you have 60, 56. The last one would be 56, but look like a hold right here. So normally the market, we got the hours that 10:30 That's normally when we have the big orders coming in. So it's got a delay. Right now we need this pie bounce back. It's 518.80, and we are for the 520 for tomorrow. We need to just go to 521 at least for around 530. Here we go. We got another red candle, and let's see if we're gonna hold. So everything is shows sell on NVIDIA. Okay, let's take a look here. Something. JP Morgan. JP Morgan got the earnings on Friday, if I'm not mistaken. Yeah, the 12th earnings report. The 19 call. Let's optimize. Let's go directional. Invest Aaron Condor. 429 would be the play. I like this one. Cause gotta move 5%, 6% to make some cash. This would pay pretty good. Cause I think it's gonna move that much for JP Morgan.
Let's get to Jim and stop trading.
There were so many cross currents last week where you had 3M do a spin-off and you had...
So I was looking at the chart was showing to you guys, but looking at JP Morgan inverse Aaron Condor for the 19 and the option strat, because Friday they have the earnings. The entry would be now $418, and so pretty much like this would be the play for the week. See what Gene Cram's saying.
For charitable trust, but that's not mispriced the way that this one's. This one's just mispriced because of the crazy nature of a spinoff. Because people didn't know what they got, so they just sold it. Now it's starting to come back. All three are good, but Scott Straser's a really good CEO. I just think that Larry Culp gave you 3 gems, and if you are ESG centric, this is the one you should buy.
Yeah, great conversation with those guys last
they're
week.
Smart. Huh?
How about tonight?
Okay, I've got a company called Ferguson, which is a lot of people may know as a high-end plumbing, but HVAC. It's a very exciting, always on the 52-week high list stock. I love those. David, welcome back.
Thank you, Jim.
Great job with, really great job with Bob.
Oh, thank you.
And
we haven't seen each other.
Yeah, and what's great about Disney, people are raising numbers.
Are they?
Password sharing, new $8 billion free cash flow. So you didn't kill Disney, you could just kill Paramount.
Thank you, Jim.
No problem.
Jim, we'll see you tonight. Bad Money, 6 p.m. Eastern Time. When we come back, Sarah's exclusive with the Treasury Secretary in China in a moment.
So I didn't say much. Ferguson, I think he mentioned, it's trading all-time high. Well, we are right now. It's JP Morgan. So in the option strat, you can go and this optimize, and then you can pick what direction you want to go. If thinking about neutral, you play this one. And then directional, you click over here, bullish, you click over here, and let's see. Very bullish, you click over here. I like this play. Risk $66 to make $9,900 profit, 1,000%. See, very valid. I need to put 98. But then this very with this see how it goes. Pretty much. Oh, that would have been now. If you move around here, make some cash. Has to move 10% by the 19, 16%. Yeah, to make that kind of money. Anywhere around 22, 20. 17, 16. Yeah, there's 2 here. It's 12%. Would it be nice? I don't think JP Morgan is gonna move that much. All right, Disney stock at 117 right now. It's not moving. Let's take a look at SPX. Become positive right now. Let's take a look like this. We try to long this one, but actually it's still going down. It's only 0.03. Come on, man, I need to move up. There's 2 resistance, 520 and 19 here, kind of hold. And this sell actually is the one from last week, 523, dive to 513, support, back again at 520, resistance 520. So the support now is 517 for the SPY. Talk about China. Let's take a look.
Turn back to China and watch the secretary's trip there. Not a lot of data out today, a little more Fed speak. Of course, there it's all leading up to CPI Wednesday and then PPI, which some argue might be a little more important given some of the supply considerations right now.
Yeah, and actually I spoke to Treasury Secretary Yellen about the inflation picture in the United States. When we spoke here in China, she said she still expects inflation to be on a downward path and is not dismayed by the flare-up we've seen in some of the inflation readings so far this year. But she is here in China. It's her second visit in 9 months, which is not insignificant. And this time she spent 4 full days on the ground, first in Guangzhou and then here in Beijing, because she has really built up a rapport and a relationship with some of the leaders here. For instance, over the course of the 4 days, she spent a total of 11 hours meeting with the vice premier, Hu Lefeng, who she's developed a good relationship with, I'm told. She spent 80 minutes meeting with Premier Li. That's the second highest ranking government leader here, next to Xi Jinping. All the meetings went overtime, which is always a good sign when it comes to discussions. So my take is that China welcomed her, and the leadership welcomed her, and the people welcomed her. They love Yellen, but they don't love the U.S. policy, and they don't love the attitude toward U.S. Commentary about overcapacity, which she was here to talk about, and commentary on the national security front as well, which she included these tough messages, even though she was able to garner, I think, a lot of enthusiasm. She was on the cover of basically every newspaper. China, U.S. discuss key economic issues as Yellen visit continues. She was on the cover of every paper today and throughout the weekend, guys. So tough messages, but also a warm reception.
Warm reception notwithstanding, though, I mean, asking the Chinese to change their patterns of consumption and cut down on their surplus of EVs, so to speak, that are being sent to overseas markets, that's an awfully big ask. I cannot imagine, I assume progress will be measured in other ways, but I can't imagine them actually doing that.
It is hard to imagine, and there was no breakthrough on that front. She hammered this message over and over about their concern, the U.S. concern, administration's concern, that China has been flooding the world with cheap EVs and cheap solar panels. They produce about 80% of solar panels in the world. That drives down prices and discourages competition. And David, because it is the top of the 10 a.m. hour on Squawk on the Street, I made two charts to illustrate this point, because we like to dive deep into the economic issues here. On the overcapacity, we've got a chart looking at the manufacturing surplus globally for China, 2% of world GDP, and has increased. It stagnated a little bit in 2023 post-COVID as their consumption economy slowed down, but it far exceeds the surpluses we've seen in history from export powerhouses like Japan and like Germany. And on the other side of it, the basic assumption here is that it requires a manufacturing deficit in other countries of the world, and the U.S. is on the losing side of that. And that's part of the problem that she's raising here. And another chart just shows how China is investing in its industrial economy and not in its real estate economy because of some of the problems it's had with the real estate sector and the restructuring that it's had to see. And that's been weighing on the economy. And instead, to stimulate their economy, they do what they have done, which is they add stimulus in the manufacturing sector. And that's really what she was here to talk about. And yes, some of the reaction and some of the commentaries on the official state media or the social media was to push back against the U.S. They're just complaining about China trying to dominate, certain industries while protecting their own high-tech industries. But she did say that they heard the message loud and clear, and they do respect her as an economist. So we'll see.
It's interesting, Sarah, to listen to her not begrudge any U.S. company from investing there. I know you talked about the visit to the brewery, looking at areas in which the two countries are already cooperating. It's a lot more of a charm offensive than last week when the operative term was coercive moves.
No, and she was very clear that she does not want to see decoupling, and she welcomed American investment in China. And to your point about the brewery, it was her last stop tonight, actually, of the whole 4-day tour. And she went to a Chinese brewery that imports American hops. So it was a good example of how American businesses can export to China. So she was here to welcome the trade relationship, said it's one of the most important bilateral relationships out there, but when they have disagreements on things like overcapacity, IP protections, as they have in the past, she wants to make sure the communication lines are open. And I think that's where the most progress has come from with her as Treasury Secretary. The communication lines have been open, and that's why she said this afternoon that undeniably the relationship is in a better place than it was a year ago. The bigger question, though, David and Carl, is what happens after the election, right? I mean, I did ask her about President Trump and where that relationship would be if he gets reelected in a year. She obviously wouldn't comment on that, but he's threatened 60% tariffs. The Chinese are still worried about the tariffs that he put in place last time that the Biden administration has kept in place, and she said that was raised in the meetings.
Yeah, former President Trump, certainly an issue. Finally, Sarah, I know you had a chance to look at some EVs. We saw a video of it earlier, but I'm curious as to your own personal take on it. I mean, was the quality equal to what you're accustomed to? I'm just sort of want to get your ratings here, so to speak, on these Chinese EVs.
I thought they were beautiful, actually. We were very impressed with the EVs. There's this one called Avatar that my producer, Donna Burton, was in love with and wishes she could get at home, especially the ones that were SUVs. They're sleek. They're polished. As I mentioned, a lot of them, there's the Neos and the BYDs, but a lot of them are actually collaborations with some of the Chinese tech companies like Huawei or Baidu themselves, which make them feel very high tech. I went into one that was a collaboration between Baidu and Geely, the Chinese automaker. It's said to be self-driving, but you still need a driver in the car. Although I definitely wouldn't feel safe driving it here in Beijing because they are more aggressive and crazier drivers than even in New York City. It's very, very crowded here, and it was a lot. But the cars they looked great. And I'm sure a lot of Americans would be happy. By the way, that Geely Baidu car that was an SUV self-driving, the basic starting price is $30,000. So you can see why American manufacturers are concerned about it.
Yeah, without a doubt. And it's something we're going to be discussing for quite some time to come. Sarah, we'll check in with you again a little bit more. Of course, get a lot more from Beijing from Sarah Eisen. Let's get to the broader markets right now, though. Our next guest says the market is priced to perfection and is taking everything in stride. And Taiwan Semiconductor Manufacturing, by the way, one of his top holdings, or at least the fund's top holdings. We're talking about Chris Ailman, California State Teachers Retirement Systems, CalSTRS Chief Investment Officer. He joins us now. CalSTRS has, by the way, $331 billion in assets under management. It is the largest educator-only pension fund in the world. All right, we got all that out of the way. So why do you sound, Chris, like you're a little, I don't want to call it pessimistic, but perhaps not as constructive on the market as some of the parade of guests we might bring on here on CNBC?
Hey, David, I would say I'm realistic. Come on. This market is doing so well. Think about the fact that at the Fed pivot back in November, they were expecting 6 cuts this year, then only 3. Now some talk about maybe not even any. Market's taken that all completely in stride, set new highs. Now, so I like this market, but it doesn't mean it's going to grow to the moon. And I think that's what people have to realize.
Yeah, which means what? In terms of if you had to sort of predict as how things will go for the rest of the year, are we kind of done with the big appreciation, given the fact that, to your point, we may no longer get those rate cuts that had been assumed or almost assured at the beginning of the year?
You know, David, I realize now in my career it is so hard to predict the future. I think the market probably has some more legs to it because, look, everybody is betting on AI, and it's unknown what that's going to add to productivity. I mean, Jamie Dimon had a big statement today in his letter, so there's a lot of optimism. But look back, you know, over time, you're a market pro. The market can have a pullback of 10, even 15% during a bull market year. So I think people have to just realize it's not always going to be straight up, new high after new high. We're going to have some seesaw patterns. We may see a pullback. It's interesting. Everybody comes in buying every time there's a pullback.
So, Chris, is the general, you think, dynamic for the year going to be better nominal growth, more focus on growth than rate cuts, and then more volatility? I mean, do you stay, is your closeness to quality grow even from here?
You know, Carl, I'm surprised by the lack of volatility. We don't have that many 2% days. Normally, we've got quite a few of those during a year, at least 20, and we haven't had those. It's been this slow grind higher in the market. So it's going to be a combination. I think the Fed should back off a bit, but not a lot. And then we're having great GDP growth. There's just a lot of optimism about what AI can bring to the economy. I think we're ahead of the game, but the market always looks ahead. So that optimism is going to stay through the election. 2025, all bets are off. I don't know what that year is going to look like.
Yeah, well, as you point out, it's going to be fairly hard to predict. But when it comes to AI, you know, I hear sort of, I'm curious as to why you perhaps may not be quite as optimistic, I guess, on the productivity gains that many are pointing to as a real possibility here.
Well, it's hard to predict, David. It's just simply that. I don't know. You know, I think comments about having Einstein on your phone, and that is great. So we're all going to make better decisions. We've got to ask better questions. But it doesn't mean that everyone's going to be using it. And, oh, by the way, every once in a while it gives you a mistake and a problem. So it's going to make us better. It's going to make us more efficient. It is, I don't know if it's as big as the steam engine, but it is a major advance, probably as much as the iPhone. So we'll see. But it's going to take time to roll out. It's advancing very quickly, and companies are embracing it. Consumers, we'll see. I'm seeing slow adoption. It's been a whole year since the big excitement about ChatGPT, so we'll see.
Yeah. I always like to look at your allocations in terms of your massive asset base. On fixed income, you've got an actual of, I think it's 10.6%. Your current target's 12%. What does that mean?
We are feathering back into fixed income, David. I like it. I think it's very attractive in here. Hey, fixed income's finally got a return. You look at the last 10 years, I'm really long term. We had rates go to zero twice, but now you actually can get a spread. Corporates are super tight, but there's private lending. I'm seeing a lot of people use treasuries and sovereigns to balance their portfolio, and then they're going into private credit and getting up pretty good yields. That market is still, while there's a lot of money going in, that market is still pretty attractive. So you can balance your portfolio for once and not put all your eggs in the equity market.
Speaking of that, Chris, I wonder, there's some creeping conversation that Europe is starting to give U.S. markets a run for their money. We've got some upside surprises today in German manufacturing. There's a sense that maybe we get rate cuts there before we get them here. Are you sensing that?
I'm as surprised as anybody. Carl, it is amazing, but Europe and non-U.S. stocks are setting highs, not as fast as the U.S. market. The growth rates aren't quite there. But, maybe Japan is finally going to come out of its doldrums for 30 years and turn it around. And yes, we're seeing strength out of Germany and out of parts of Northern Europe. So the global economy is doing okay. And that's a good sign. That means diversification, which we're very diverse around the world. We're getting some benefits of that. We'll see if I don't think it can outpace the U.S. I would be surprised at that. I think our Fed does a better job. But, hey, we got a problem with our deficits, and that's not going to go away. So we've got a big anchor we're dragging around in our economy. And so there are going to be opportunities around the world.
Actually, let me end it there, though, on that concern you just raised about our deficits. Are we going to revisit that, you think, in terms of interest payments and having an auction that fails? I'm just curious, given you mentioned it, Chris, where your sort of head's at on that.
David, I think that is going to be the exact point. I've been telling my board to pay attention to the tail on Treasury auctions. I know it's esoteric for a lot of people, but right now we're fine. There's still an appetite for our debt. But boy, as you get into 2025, U.S. debt is going to be, the interest payment on U.S. debt is going to be such a drag on the deficit and on the budget that it's going to slow our economy. We can't run around with this much weight. And, I'll use the phrase, the U.S. budget can use Ozempic, but it's not going to turn it around, and it's not going to lose weight as fast as other people do. So they really need to focus on it. It's going to be a drag for whoever is the president next year. It is going to really be an issue going over the next 4 years, just like climate change. I think those mega trends are working against us, not for us.
All right. To be continued, Chris. Always appreciate it. Thank you.
Thank you.
As we go to break, 30 minutes into trading, some of the movers we're watching today. Tesla shares rebounding from last week's big sell-off. News of a robo-taxi debut in August. Morgan Stanley does reiterate an overweight today. Taiwan semi moving higher. The Biden White House giving the company up to $6.6 billion to build out its plant in Arizona. A lot more on the other chip names to watch here. And then watch Boeing and Southwest today. This engine cowling fell off a plane during takeoff this weekend. FAA is looking into that. We'll get the latest as Squawk on the Street is back in a moment.
It's another ugly headline for Boeing this weekend after one of Southwest 737s lost its engine cover, this after takeoff. Phil LeBeau joins us. He's got that story, and it may not be Boeing's fault, I guess, Phil, although that doesn't seem to necessarily always matter in these things.
No, right now people have Boeing in the crosshairs. Frankly, they've got the airlines in the crosshairs in terms of concerns about maintenance and whether or not, as we see more flights added, the maintenance of the aircraft are up to snuff. And those concerns fueled by this video out of Denver International Airport yesterday where there was a Southwest plane. This video is scary for anybody who was on this flight. As it's taking off, the engine cowling, the covering on the engine ripped off. Now, there was not an incident in terms of, it was an incident where there was nobody injured. The plane safely returned back to the airport. But look, understandably, you see this, you sit there and say, what is going on here? In terms of this cowling incident, Southwest, we've reached out to them. The maintenance team there is now investigating this incident, as is the FAA, which they do with all of these types of incidents. The plane, by the way, was delivered in 2015. Why is that important? Yes, it's a Boeing 737, but it's not a MAX model. And this has been in the Southwest fleet for 9 years. 9 years. So it's a maintenance issue. Boeing and GE will assist in the investigation as Southwest looks into what might have happened here. As you take a look at shares of Southwest, remember that the airline posts results on April 25th. No doubt this will be one of the questions we have for Bob Jordan, not just about this incident, but overall aircraft and airline maintenance and the issues that have been front and center over the last 6 months to last year. And then as you take a look at shares of Boeing, keep in mind that tomorrow we will get Boeing's orders and deliveries, not only for March, but for all of the first quarter, and then we can extrapolate that in terms of what we might see for the full year. That's really what's moving the Boeing shares today, David, because when you look at the concern about manufacturing at Boeing, the question is, will they have to slow down production as they did in the first quarter for the rest of this year? We'll get some indication based on the numbers that we see tomorrow.
Yeah, some of the anecdotal reporting suggests that production has really slowed to a crawl, Phil. Important news. That's our Phil LeBeau on Boeing today. Still to come, a big week for the Fed and the economy, as you know, including Fed minutes and, of course, key inflation data. We'll get you ready for that. Is the AI narrative breaking down? Apollo's chief economist, Torsten Slok, will talk about what the numbers may be telling us after the break.
So big pressure on Boeing because the incident, they have the accident, incident, whatever you call. So, but as you can see in the 5 minutes, we have indecises. It was a 184. It hit a 184 open short positions, but we don't see much on here. Let's zoom out. Let's take a look at 1 hour. Yeah, we have this buy at 179, big support, and the bears attack at 190. So right now, last resistance, I believe, 183. If the numbers bad tomorrow, let's take a look on a day chart. The next support is a 121. Oh my God. The weekly, no, right here. The weekly is more, I mean, it's not a support like this line over here for 140, but by a 169 block, this was the last resistance from the bottom here at 117. Okay, so let's see it. Let's take a look on options for Boeing, because that could be a play. Boeing did BA. And let's take a look. No, normally they're cheap. So 175 put $49 and call 190 call 65. Let's try to play that one. $100. Let's put 116 to fill quick.
To learn more.
Welcome back to Squawk on the Street, a make or break week for markets with a host of Fed Speak on the agenda, as well as Fed Minutes, and of course CPI and PPI inflation data. Apollo Global Management's chief economist Torsten Slok joins us this morning. Torsten, your chart of the Mag 7 turned into the Fab 4, just showing the splintering of the basket in recent quarters, got a lot of attention this week. I wonder what you think that says about the AI environment right now.
That's a very important question, Carl, because I think that last year and for quite some time, it was really simple. And the market loves simple stories. It was all about the Magnificent Seven. You don't need to do your homework. Everything will go up because the Magnificent Seven are all fine. Well, now guess what? Looking at it today, exactly as you're saying, you have, of course, Tesla down. You also have Apple. You also have, of course, some fairly significant developments when it comes to Alphabet. On the other side, you still have NVIDIA up. You have Meta up. It has just become a lot more nuanced. So the bottom line, Carl, to your question really is that there are some very important developments that you just simply cannot escape. You have to do your homework. You have to figure out what of these companies are actually benefiting going forward. And is it just one AI story, or is it really actually much more complicated than that?
Do you think it cooperates with the vision that the market is digesting this narrative, processing better information, and broadening to other sectors, which, of course, bulls have been waiting for forever?
Yeah, I do think so, and I think it's important that this is spreading to other sectors because now there is more nuance in what sectors, what industries are actually benefiting and what other industries are not. But that's very important because it used to be the case in 2022. It was all about rates and inflation. And now suddenly homework has come back. Doing your homework and figuring out what should my stock picking be? What should my credit selection be? That's both in public markets and in private markets turns out to be really, really important. So therefore fundamentals, yes, we can debate, and as you and I do often, what the discussion is about inflation, the Fed, and unemployment, and so on. But really, at the end of the day, for individual names, you have to look at it from a bottom-up perspective. Who are the winners? Who are the losers? And it just turns out to be a lot more complicated than just simply buying the Magnificent Seven.
Commodities, obviously, Torsten, moving to the front of the conversations given the events in the Middle East. People starting to worry what kind of pressure that's going to put, at least on headline inflation readings. Do you think it's the most important story right now?
Well, I think that if you combine that with what we saw last week when we saw ISM prices paid for manufacturing, the fact that manufacturing is beginning to recover and beginning to show some more upward momentum, including on prices paid, it does suggest that maybe goods inflation, which, of course, as you know, went up first a lot and then it came down to more normal. Now the fear you can have is that maybe it's beginning to reaccelerate exactly because of geopolitical risks and also because of the manufacturing sector coming back. Combining that with both shelter inflation and supercore inflation also showing some more signs of life, you do begin to worry about the Fed here that this repricing of rates, I think, is very important because it is telling you that we've been waiting for this slowdown for so long. Why is it everyone is expecting this slowdown to come in the next several quarters, in particular with the tailwind of the stock market up $10 trillion since the November FOMC meeting? We have a dramatic tailwind to consumption and to capex over the coming quarters that will continue to support inflation to the upside.
All right. Torsten, way to make a splash with some of the graphics lately. It's good to see you. Torsten Slok joining us from Apollo.
Thank you.
After the break, Treasury Secretary Janet Yellen. Let's get to Sarah in Beijing with more on what she has ahead for us. Sarah.
David, you heard a lot about how she was concerned about overcapacity. The Treasury Secretary also had a pretty stark warning for China as it relates to supporting Russia in its war against Ukraine. You'll hear from her on that and also what she spoke about regarding TikTok and that legislation moving through Congress with Chinese officials. When we come right back here live from Beijing on Squawk on the Street.
Okay, the good news right now so far, it's the resistance that we have at 519. It's trying to become a support. So that means, oh no, come on, man. We need to break this. Oh, that's the reason. You have this block over here, sell block at 3 minutes. That's the reason we not having through yet. I need to destroy this to pass. Give me to Papa.
Athletics.com.
Welcome back, everybody. I'm Contessa Brewer with your CNBC News update. Former President Trump issued a video statement this morning saying abortion laws should be left to the states. In a 4.5-minute video, he did not take a position on a national ban promoted by some of his allies, but he took credit for the Supreme Court's overturning of Roe v. Wade in 2022. Palestinians are returning to Khan Yunis after Israel said its forces are withdrawing from the second largest city in the Gaza Strip. Israel sent troops there in December as part of its ground offensive and says that operation killed thousands of militants in the former Hamas stronghold. And Nashville police arrested country music star Morgan Wallen for allegedly throwing a chair from the rooftop of a bar. They say it landed about 3 feet from 2 officers standing below the 6-story venue. Wallen posted a $15,000 bond overnight. He faces 3 counts of reckless endangerment and 1 of disorderly conduct as well. And now I'm going to send a very long toss back to Sarah Eisen in Beijing. Hi, Sarah.
Hi, Contessa. Beauty of television here in Beijing tonight, where Treasury Secretary Janet Yellen is just wrapping up 4 full days on the ground, both in Guangzhou in the south of China, the manufacturing hub, and then here in Beijing, where she met with high-ranking officials. The highest was Premier Li, who's the #2 leader in China. The purpose of her trip was to just continue to open lines of communication about the economic relationship here. We talked about some of her concerns with overcapacity and potentially Chinese dumping. She also had conversations with Chinese leadership about TikTok and that bill that's going through Congress that President Biden did say he would sign if it passes the Senate. I asked the Treasury Secretary how those conversations went with the Chinese and whether they were concerned.
I think this is an important and profitable company, and I think they're concerned by the prospect that they would be forced out of the United States, or what the legislation really requires is that they would sell the company to a domestic purchaser. So I think they certainly have concerns about that.
Do you think the Chinese government will allow the U.S. assets sold to U.S. investors or U.S. company?
I honestly don't want to get ahead of where we are on this. The president has said he would sign the House legislation.
You also brought up matters of national security on this trip and said that there would be consequences for China if they increase support militarily for Russia. And we also heard this week, reportedly, from Secretary of State Antony Blinken, who said that that was happening on a large scale. So are we looking at sanctions on Chinese companies?
Well, it's not only Chinese companies. We would feel that particularly any financial institution that facilitated trade in dual-use goods or strictly military goods in violation of our sanctions and aiding Russia's military, we would consider sanctioning. The president issued a recent executive order that would enable Treasury to impose sanctions on financial institutions that are found to be doing this in a systematic way. And we've not used this tool yet, but it is one that would be available. And what I've tried to make clear is that we stand ready to act if we see significant violations especially by financial institutions.
In China?
Well, and other countries as well.
What about the Chinese government and its support of Russia?
Well, China is entitled to have a relationship with Russia. What we have made clear is that it is unacceptable to us for China to support Russia militarily. And that doesn't say that China can't have a relationship with Russia. China and Russia do a lot of trade. Much of it is unproblematic, but anything that involves aiding Russia's military in their brutal war against Ukraine is unacceptable to us, and we have the ability to sanction it.
We've also seen increasingly close economic ties between China and Iran, and especially now with Iran increasing threats against Israel, I do wonder how concerned you are and American businesses should be about this.
Well, we have very strong sanctions in place against Iran, and when we encounter ongoing violations, we've had a number of sanctions actions that have tried to address that. That's an area of great concern.
But just in terms of China's relationship with Russia, with Iran, is that a matter that the U.S. businesses who do a lot of business in China should be concerned about?
To the extent that it creates a national security risk for us, it is something we stand ready to address.
Should American companies be reducing their exposure to China on a manufacturing basis?
Look, I think trade and investment between China and the United States is valuable. Many American companies are doing excellent business in China, have been here for a long time. The same is true of Chinese companies in the United States, and this trade is beneficial. And the great majority of it is uncontroversial. And I think we should not do anything to impede that trading and investment relationship. But in areas where we have national security concerns, as we have clearly demonstrated, we stand ready to act to protect our national security. That may mean export controls or other interventions. And we try to target those narrowly so that they don't have broad-based impact on China's economy as a whole. And we feel strongly and have agreed with the Chinese that we need a level playing field. Now, when we interfere, when we have regulations that affect our trade and investment with China, or if it's national security or other reasons, we go through an open and transparent rule writing process. We put out proposed regulations. We accept comments. The Chinese have the opportunity to comment. We take the input and we write regulations. It's very clear what we're doing. In China's case, often the support, we believe there's maybe often a lot of support in ways that are not transparent. And that really is a meaningful difference. But we're not trying to stifle trade and investment, broadly speaking. So I would not want to advise American firms don't do business in China.
But if I'm Tim Cook of Apple and looking at the geopolitical relationship and the national security concerns, ultimately, won't that trump the economic relationship?
Well, the purpose of the dialogue that I've been involved with now for well over a year with our Chinese counterparts is intended to make sure that that does not happen, that we don't have an unintended escalation of tensions, that we understand one another's red lines, we avoid misunderstandings, and we preserve economic interactions that are beneficial to both sides. We manage our relationship. We need to manage it responsibly so that both sides can continue to benefit.
You put a lot of work into this, and you said in your news conference this afternoon that the relationship is in a better place than it was a year ago.
Definitely.
Do you worry about the relationship in 1 year from now if President Trump gets reelected?
Look, I don't want to get into politics, I'm governed by the Hatch Act. I feel President Biden and President Xi directed myself and the Vice Premier He Lifeng to work toward a better, more stable, predictable relationship with one another, to stabilize our relationship, to try to manage our differences, create better channels of communication, and importantly, work together on many things where we can both make contributions that are important to the globe, whether it's dealing with climate change or other issues, public health issues, debt issues of low-income countries, and that's what we're trying to do. We have greatly deepened our relationships, and I feel our relationship in this economic sphere is in a much better place.
One thing that's helped the dynamic is the U.S. is coming with a strong hand right now on our economy.
I think we can feel great about our economy.
I was going to ask you what you made of this last jobs report.
Well, it just shows that U.S. is firing on all cylinders. I mean, in terms of short-term performance, inflation is coming down. The job market is very strong. Growth is really been a lot stronger than I would have expected at this stage. We had 3.1% growth last year. Inflation's coming down. Labor supply is up, and we're seeing some of the pressures we might worry about coming from the labor market impacting inflation. They're subsiding, but unemployment remains very low.
You're still confident we can get to 2% this year? We've seen a little bit of a flare-up so far this year.
Well, I think it will continue to come down over time. That's my expectation, and I'm hopeful that we can certainly get into the twos.
And recovery stays intact with or without Fed rate cuts?
So I'm not going to make a forecast on Fed rate cuts. The Fed has indicated that they want to make sure that inflation's really coming down, and that they're obviously considering rate cuts that would be appropriate when they reach that judgment. And we've had generally good news on inflation. Let's look at the data. I believe inflation will continue to come down.
Yeah, and I guess I'm just wondering if the economy continues to hold up no matter what happens on the Fed.
I think that we've got a good, strong economy. We've got very strong domestic demand. Consumers are holding up. Some low-income consumers are perhaps exhausting their buffers of saving that they built up during the pandemic. We're seeing a little bit more distress at the household level there, but generally households are in very good financial shape. Our financial system is generally quite strong. Things can always happen. There's always recession risk. Geopolitical developments could create risk to our economy, but I think we've got a good, strong economy that's on a solid track.
And that position of strength in the U.S. economy, Carl and David, has shifted the dynamic a bit here, with China's economy being weaker than expected coming out of the COVID recovery. After they locked down, consumption hasn't been as strong as they had hoped, which is one of the reasons why they have poured more money into manufacturing. China's aiming for 5% growth target this year. IMF still has China's economy growing in the 4s this year, and there are still economic reports that come in weaker than expected. On the U.S., she has been right in calling for a soft landing and no recession, which now many other economists have caught up to. I thought it was particularly interesting that she is not too worried either about inflation numbers that have come in stronger than expected. We'll see what CPI brings on Wednesday, but she expects inflation to still come down steadily here. And obviously, I tried to engage her on the Fed, as she used to lead the Fed, but she wouldn't go there. She hinted, though, I thought, in that answer about strong economy, but inflation is coming down. That
line.
Maybe
about,
it's time for a cut without saying it.
That line about being hopeful we can certainly get into the twos definitely shouted out at viewers, I think.
Agree. And that's really the thing now, is whether we're in this last mile of inflation, if it's going to be tricky to get from the 3s to the 2s on consumer prices. Look, where's Brent? Almost at $90 a barrel. This is another issue that is flaring here with these commodity prices on the rise. But she's pretty hopeful that we're going to get there. And as I said, when it comes to the Chinese economy, you know, it's hard to tell, because we tried to spend some time at some of the malls and seeing people were out and about, they were shopping, but clearly, you know, the hangover from some of the real estate problems, and also the fact that consumers just haven't come out in force traveling or spending as was expected, is weighing.
Okay, everyone, we gonna pretty much end the cover right now, the coverage from this morning opening bell. But before that, I'm gonna update my plays over here. Let me stop a couple things, and let's see. Okay, so Boeing. The play in Boeing was 190, 175. Okay. Take this out. The 190, 175 put I got from $49. 49. And call, I pay, I think 66. 66. Save. Boeing. Boeing. Delivery tomorrow. If you're not moved tomorrow, I close this. And just print an arrow for my SPY. And let's go. So we're gonna, yeah, now the 519 become a support. Let's take a look. Disney South, Tesla, pretty much out. 53, 52, 48. Stupid play. SPY, still down. $50. Need to break this block over here on the 520, 519.90. I'm gonna close this trade. I know I'm gonna do a big mistake, but let's close. Close. I opened two other ones. Tesla. Let's close this too. That open. That open Tesla. Ooh, why I buy this one? Guys, I bought Hood. Robinhood. I got the 21 call. And I got for $7. Let's go to save trades. Let's close the SPY. Close. This one I need to double check how much I pay. And what's the, it was not 138, it's 139. 39 put, pay 81. And the call I think is 52.50. Yeah. How much I pay? 80. Yeah, 80. So I save this trade. Overwrite. Also on the TSM, I have this app that shows on a buy position. So maybe we got something good. Why I close this SPY? Close the SPY because we had a situation. Let's go. Wow. So many. Okay, let's go SPY the last one. There was this one. It closed it down 24% at $52 because it was a heavily so far at 3 minutes. A heavily exposure for let me show it to you guys. I think this is SPY. Yeah, this is SPY right here. It's trading now. The 519 become a support, but then we still have 520 resistance, and we have this is at 3 minutes still here, the bear block. So this pressure, of course, 3 minutes this can disappear if the bulls push hard, but you know, it could be like towards the end of the day, hit over here, bounce back again down to 518, and then it would be like both dead in the water. So instead, I collected $65 profit on a call, but I lost my put, so that's okay. So I lost $50. Wow, 1 hour 30 minutes. Okay, guys. See you probably tonight to see how my plays go, and talk to you guys next time.